Hello, I'm Gordon Phillips. You know, the truth is a funny thing. You can distort it, you can even suppress it for a while. Sometimes you discover that it's hiding in plain view all along. But eventually, the truth always comes out. The problem with the truth is that once you learn it, you can't unlearn it. To understand how the income tax is applied, we need to look at the legal authority of the IRS to tax U.S. citizens living and working within the 50 states. Keep in mind that the Constitution protects the rights of these citizens. Therefore, the Internal Revenue Code must be written in such a way as to remain constitutional. All United States laws written by Congress are codified into 50 titles of law, each covering a different category of laws relating to education, the military, banking, and so forth. These 50 titles encompass what is known as the United States Code, abbreviated as USC, and can be read by the public at any law library. Title 26 comprises the entire Internal Revenue Code. Many tax professionals and even tax attorneys mistakenly view the Internal Revenue Code as a series of code sections that run from beginning to end much like a telephone directory. That is totally inaccurate. The Internal Revenue Code is not applied generally, and one cannot comprehend the code without first having a clear understanding of its structure and subdivision. The code currently consists of 100 chapters comprising 9,806 code sections compartmentalized as of this year into 11 subtitles. The first 5 subtitles, A through E, each cover distinctly different categories of tax. Subtitle A is the income tax. Subtitle B is estate and gift taxes. Subtitle C, the employment tax. Subtitle D is miscellaneous excise taxes. Subtitle E is alcohol, tobacco, and certain other excise taxes. Subtitle F is procedure and administration, which includes the definitions of various legal terms as used within the code. Subtitles G through K cover miscellaneous topics such as the financing of presidential election campaigns, etc. Each subtitle is a totally distinct and separate body of law unto itself. The application of each subtitle is found to be confined within its respective chapters, meaning that the liability and enforcement provisions confined within one subtitle do not extend to the enforcement of law in some other subtitle. Under the law, for one to become liable for the payment of any given tax, one must first be made legally subject to that tax. In other words, the tax must first be imposed by Congress, and the liability for the tax must arise from a specific written statute as expressed by the intent of the legislature. So if, for example, you're involved in the manufacture of alcohol, you become the subject of the excise tax on the privilege of being associated with that activity, and are thereby made liable for the payment of the alcohol tax. The same is true with regards to the manufacture of tobacco products. Perhaps you've seen the excise tax stamps on a package of cigarettes or on a bottle of liquor. However, if you are not involved in either of the activities, you are not liable for the payment of the tax associated with them. Just imagine if you were to receive a letter from the IRS claiming that you failed to file a return to report the number of bottles of whiskey you had just manufactured, and demanding payment from you of $20,000 in unpaid alcohol excise tax. Would you immediately begin arguing the amount of the bill? Wouldn't you instead protest that they were writing to the wrong person, and that you had never been involved in that activity, and therefore could not possibly owe a penny of alcohol tax, let alone what the IRS claimed you owed? Well, what about income taxes? What about employment taxes? If you're like most Americans, you've probably always assumed that you had a liability to pay those taxes. But then you also assumed that you lived in a democracy. And you've also assumed that the government, not a private banking cartel, controls the supply of money in circulation. The only code section in all of Subtitle A that makes anyone liable to pay a tax on income is Code Section 1461, which states, "Every person required to deduct and withhold any tax under this chapter is hereby made liable for such tax." Well, who is this any person that Congress made liable to deduct and withhold? Code Section 7701A16 defines this person as the withholding agent, who is required to deduct and withhold any tax under the provisions of sections 1441, 1442, and 1443. So we look up those code sections and we see that Code Section 1441 applies to non-resident aliens, Code Section 1442 applies to foreign corporations, and Code Section 1443 applies to certain foreign tax-exempt organizations. It's important to understand that while the withholding agent may be required to file a return on behalf of his non-resident alien principal, he's not required to file a return to report his own income earned within the 50 states. The astonishing truth is that Subtitle A imposes the liability for the payment of income taxes on the income of foreigners and certain U.S. citizens working in a foreign country under a current tax treaty with the United States and earning over the $70,000 annual exclusion. There is no code section in all of Subtitle A, or anywhere else in the entire Internal Revenue Code for that matter, that makes the United States citizen earning his or her living exclusively within the 50 states of the Union liable for the tax that is imposed on income under Subtitle A. Period. With today's computers that can hold the entire Internal Revenue Code on a single CD-ROM, it's a very simple matter to search in a matter of seconds for any and all occurrences of such words as citizen and income throughout the entire Internal Revenue Code, let alone just in Subtitle A. And sure enough, the code section imposing a liability on a U.S. citizen for the tax on income when working within the 50 states of the Union is just not there. As further proof, the index for the Internal Revenue Code has no listing for the liability of citizens unless that income is from the insular island possessions. So why is the income tax so limited in its application? Why is the income of citizens living and working within the 50 states not subject to the income tax? Well, under the Constitution, Congress can impose two, and only two, different classes of taxes: direct taxes and indirect taxes. Article 1, Section 2, Clause 3 of the Constitution states,
"Representatives and direct taxes shall be apportioned among the several states."
Article 1, Section 9, Clause 4 states,
"No capitation or other direct tax shall be laid unless in proportion to the census or enumeration hereinbefore directed to be taken."
Americans are a highly mobile society, so some states could lose population over time while other states gained it. That's why there's a national census every 10 years to count noses, to determine both the number of representatives to be elected from each state and the proportionate share of each state's direct tax burden should Congress decide to impose a direct tax. Under direct taxation, Congress cannot directly tax a U.S. citizen. Direct taxes must be imposed according to census and enumeration upon the states of the Union only, to be collected within their respective borders from their own state citizens according to the limitations imposed by their own state constitutions. There are currently 435 representatives in the House of Representatives. If, for example, Congress decided to pass a direct tax to raise, say, $435 million, the governor of a state with 10 representatives would receive a bill from Congress for 10 435ths of that $435 million, or $10 million. The only other type of tax Congress can impose is an indirect tax, which under Article 1, Section 8, Clause 1 of the Constitution states,
"The Congress shall have power to lay and collect taxes, duties, imposts, and excises. But all duties, imposts, and excises shall be uniform throughout the United States."
Two examples of constitutionally uniform excise taxes are the federal excise tax you pay on each gallon of gasoline you pump and on each long-distance telephone call you make, regardless of which of the 50 states you're in. Keep in mind that all indirect taxes are avoidable in nature. If you don't want to pay the tax, don't participate in the activity associated with the tax. For example, to avoid the federal excise tax on gasoline, don't pump gas, ride a bike instead. To avoid the federal excise tax on long-distance telephone service, write a letter. Direct taxes, however, are not avoidable. Now let's try to determine the nature of the taxes you've been paying each April 15th to the IRS. Are they direct or indirect? Keep in mind that an income tax is not a tax on you as a person. It's a tax on income. Income is inanimate. It cannot reach into its own pocket to pay the tax on itself. Someone has to be made liable for its payment. The question is, who is made liable? Well, we've already seen who's made liable, the withholding agent. And who is he required to withhold from? Those whose income is subject to the tax. And who is that? Foreigners. And why is that? Because the property of foreigners is not protected by the Constitution. The Supreme Court ruled in the 1920 case Eisner versus Macomber that income
may be defined as the gain derived from capital, from labor, or from both combined.
In the case Stapler versus U.S., the High Court ruled that income is not a wage or compensation for any type of labor. In Doyle versus Mitchell Brothers, the High Court ruled,
whatever difficulty there may be about a precise and scientific definition of income, it imports something entirely distinct from principal or capital, either as a subject of taxation or as a measure of the tax, conveying rather the idea of gain or increase arising from corporate activities. We must reject the broad contention that all receipts, everything that comes in, are income.
In Connor versus the United States, the High Court ruled,
if there is no gain, there is no income. Congress has taxed income, not compensation.
In 1894, Congress tried to get away with imposing a direct tax on the property of U.S. citizens by passing the Income Tax Act of 1894. On May 20th, 1895, in their decision in Pollock versus Farmers Loan and Trust Company, the Supreme Court rejected this tax since it violated the constitutional requirement of apportionment among the states. To quote the High Court in Pollock,
the Constitution prohibits any direct tax unless in proportion to numbers as ascertained by the census, and prohibits Congress from laying a direct tax on the revenue from property of the citizen without regard to state lines. We are of the opinion that taxes on personal property being a direct tax, the income of personal property are likewise direct taxes.
Those same Jekyll Island insiders passed both the 16th Amendment and the Income Tax Act of 1913 in that same year to lay the groundwork for the imposition of income tax, which, as we've seen, never did have anything to do with the raising of revenue and has technically never been applied against the income of U.S. citizens working within the 50 states. The income tax inevitably was collected to guarantee the international bankers the interest on the national debt that would inevitably result after the passage of the Federal Reserve Act in December of that same year. The 16th Amendment, which became part of the Constitution on February 25, 1913, is the so-called Income Tax Amendment, which states,
the Congress shall have power to lay and collect taxes on incomes from whatever source derived, without apportionment among the several states, and without regard to any census or enumeration.
To this very day, a nationwide chorus of politicians, TV economists, and law school professors alike all chime in unison that the 16th Amendment authorized the imposition of an income tax on ordinary U.S. citizens, and they are all mistaken. The 16th Amendment did not amend or change the U.S. Constitution. But please don't just take my word for it. The Supreme Court itself in January 1916 ruled in Bruce-Shaber versus Union Pacific Railroad,
the proposition and the contentions under the 16th Amendment would cause one provision of the Constitution to destroy another. That is, they would result in bringing the provisions of the amendment exempting a direct tax from apportionment into irreconcilable conflict with the general requirement that all direct taxes be apportioned. The result, instead of simplifying the situation and making clear the limitations of the taxing power, which obviously the amendment must have intended to accomplish, would create radical and destructive changes in our constitutional system and multiply confusion. The 16th Amendment, as correctly interpreted, is limited to indirect taxes, and for that reason is constitutional.
In the case Stanton versus Baltic Mining, also decided in 1916, the High Court stated that the 16th Amendment conferred, and I quote, no new power of taxation. Imagine that. the highest court in the land stating, in plain English, for everyone to read, including the IRS, that the 16th Amendment conferred no new power of taxation. So the so-called income tax amendment that everybody and their uncle believes authorized the income tax, and that many patriotic Americans still object to since there is overwhelming evidence that it was never properly ratified by the states, changed absolutely nothing. The 16th Amendment was constitutional window dressing and might as well have never been written. The fact that the 16th Amendment did not change one word or phrase in the Constitution has for years been one of the U.S. government's best-kept secrets. Many college professors in our nation's most prestigious institutions still teach that the income tax is neither a direct nor an indirect tax, but is a hybrid tax that falls somewhere between the two. Such a gross lack of understanding by those charged with teaching the law to future lawyers is, in my opinion, unpardonable. Thwarted by both the Bruchaber and Stanton decisions, the Department of the Treasury issued Treasury Decision Number 2313 on March 21, 1916. Here are a few excerpted quotes from TD 2313 in reference to the Bruchaber decision.
It is hereby held that income accruing to non-resident aliens in the form of interest and dividends is subject to the income tax imposed by the Act of October 3, 1913. The responsible heads, agents, or representatives of non-resident aliens shall make a full and complete return of the income therefrom on Form 1040.
The Treasury Department has stated that you are to file Form 1040 on behalf of your non-resident alien principal. So don't forget to do that next April 15th. We have to ask ourselves a question at this point. Do we see a pattern developing here? Is it possible that this information has been deliberately withheld from the general public? And if so, why? Now you can begin to understand what your lifetime of voluntary compliance really means and how important it is to the IRS. Remember Section 1111.1 of the Internal Revenue Manual, which we showed you earlier? The mission of the service is to encourage and achieve the highest possible degree of voluntary compliance with the tax laws. If what we've said is true, then one would expect employers to be told somewhere that they are not required to withhold from U.S. citizen employees. Keep in mind that the only requirement for withholding is from foreign or non-resident alien type individuals. And indeed, if we read IRS Publication 515, we find a statement the IRS hopes you never see. Under the main heading, Withholding Exemptions and Reductions, and within the paragraph titled Evidence of Residence, the IRS states the following in speaking to the payer of income.
If an individual gives you a written statement stating that he or she is a citizen or resident of the United States and you do not know otherwise, you do not have to withhold tax.
And what is the statement of citizenship? It's simply an affidavit notarized and signed under penalties of perjury stating that I, John Doe, am a citizen of the United States. It's just that simple. So the bottom line is that according to the IRS, if you are a citizen or resident of the United States, the payer of your income does not have to withhold tax. Imagine that. Now ask yourself this question. If a United States citizen ever really were liable for tax withholding, why would the IRS ever have printed this statement anywhere? Why would it even exist in writing? 26 Code of Federal Regulations 1.1441-5, paragraph C states,
The duplicate copy of each statement and form filed pursuant to this section shall be forwarded with a letter of transmittal to Internal Revenue Service Center, Philadelphia, Pennsylvania 19255. The original statement shall be retained by the withholding agent.
If the citizen within the states of the Union stops filing Form 1040, the IRS will occasionally start a criminal investigation. With what you have learned so far, you can understand that the IRS computer would not recognize the validity of a criminal investigation against a citizen working exclusively within the 50 states. In fact, the IRS Internal Revenue Manual, Chapter 1100, titled Organization and Staffing, states in Section 1132.75,
The Criminal Investigation Division enforces the criminal statute applicable to income, estate, gift, employment, and excise tax laws involving United States citizens residing in foreign countries and non-resident aliens subject to federal income tax filing requirements.
There's no mention of the U.S. citizen residing within the 50 states, is there? Why? Because the income of citizens living and working within the 50 states is not the subject of the tax. Now you have to make a decision. Are you going to be a part of the problem or a part of the solution? So what is the solution to everything you've just learned? Is it to stop filing returns, as the IRS itself has recently admitted is now reaching near epidemic proportion? Well, if the law does not require you to file, and you know that for a fact, then there's no reason to file. However, the only one who can make that determination is you. And you can't base that determination on the superficial information you've been exposed to on this tape. The purpose of this introductory tape is merely to break some of the rust free on our mental gears, to get us to think for ourselves. We need to educate ourselves. Remember what the Supreme Court said in U.S. versus Minker?
Because of what appears to be a lawful command on the surface, many citizens, because of their respect for what appears to be law, are cunningly coerced into waiving their rights due to ignorance.